Is the market going to break out to a new bull run from here? And also, moving forward, what will happen to this channel in terms of the weekly market reviews? Will this be a breakout, or something new will be coming along? Let's watch the video to find out more. Welcome back to my weekly show of this Tony's Investing Diary, where we will look into the weekly stock markets review of the US markets, as well as some of the counters like the Magnificent 7, and also perhaps some of the stocks that are in my watch list currently. Also, I will be proposing a sort of a breakout with my audience here. You may be wondering what breakout am I referring to. I'm referring to breaking up in terms of how the show is going to be recorded moving forward, because so far from the past few weeks of videos, in terms of the views, the data analytics, is clearly visible that this weekly stock market review is not something that the audience really want to see because of the low views and also the low durations of watch hours. So therefore, I'm thinking about changing the format moving forward. I will be breaking up this weekly stock market review, and instead I will be probably focusing on certain themes or certain specific stock counters, or even trading strategies or techniques or financial independence or various topics moving forward. So there will not be any more weekly market review from now on, unless somehow there's a overwhelming request from this video that, hey, you still want to listen to my weekly chatting or and review of the stock markets and counters. Otherwise, probably will be changing to something more thematic in nature instead of a weekly review of the stock markets, which can be quite boring, I guess, to some of you. Okay, so anyway, enough of this talking about. Let's check out how's our SPY doing. Are they going to break out to a new bull run? Let's take a look at the chart. Okay, looking at SPY in terms of the weekly chart, we can see that there's almost a full recovery from the previous week's fall. The candle is now a strong solid green, and in fact if you look at the daily chart, SPY actually broke a slightly new high for briefly on Friday before it actually closed lower, in fact lower than it started. So is this a breakout to a new uptrend? Personally, I'm thinking I'm having mixed feelings here, to be honest. On one hand, yes, it's heartening to see this week has been quite bullish, but on the other hand, there hasn't been really clear sign of this resistance of the last high being broken. So for me, I am not chasing after. So for now, I will just continue my option strategies of grinding about daily incomes. Also depends on the prices and depends on the options available. So let's move on to the other counters. Next will be DIA, which is on the Dow Jones Industrial Average. So DIAs mostly, they are more of the industrial counters and banks and so on, more of the old industrial businesses. For DIA, we can see that it's not as strong as SPY, because partly the recovery in the past 5 days are led by the IT. So for DIA, it only rose a little bit on the weekly chart, and on daily, as you can see, it's mostly range bound, mostly flat. Indicators wise, don't really have much to tell us. I would say is that it's still red on weekly chart, and daily is only a little bit of green blips, so it's not going anywhere for now. I will just watch aside when I don't have a favorable setup for me to take. Now move on to QQQ, which is the ETF for the Nasdaq. You will see that QQQ is just like SPY, really candle, very strong rebound that almost covers the entire loss of last week, but it's almost. So in terms of MACD histogram, it's still red, and if you look at the daily chart, this one is only near to the last top but haven't been there, and I think it's facing a bit of resistance already. So whether will this break up higher and goes to much more higher run there, in stock market anything is possible, although I'm not betting on that because of the probably lower ops. IWN, which is the ETF for Russell 2000. For IWN, it inched down a little bit, so the fall has slowed although there's no gain at all. So I guess it's probably the weakest among the other four among the indexes. So for IWN, quite similar to DIA, a little bit range bound here, and I guess this 40 days moving average is still a sort of a support holding it up. Okay, let's take a look at other counters. For example, gold, GLD, the gold ETF. So gold has seen a little bit of activity. It seems to start to rise, at least on Friday, and this 50 days moving average seems to be a second or rather third time rebound or as a support, because if you look at the way gold has been behaving in the past, it hit a bottom back in October, just like the other counters there. And of course, back in October is actually a hammer candle that actually bounced off from the 200 weeks moving average, leading to the bull run until now. So on the daily chart, it actually jumped here and then jumped again on the 50 days moving average, and finally now this is the third time jump. So how high would this go? We shall see, because if I were to draw a line, right, to link the top, the interim peaks, the first jump was quite strong, roughly about 30 degree. The second jump from here is much weaker. I would say probably only 20 degree in terms of gradient. So for this third jump, there's right now waving up. How high would it go? I'm not so sure, but this bull is definitely a bit running out its breath. Okay, let's take a look at the Magnificent 7. Starting off with AAPL, Apple. We can see a similar rise in the week. In Apple's case, on the weekly chart, it's actually bouncing off from the 40-week moving average. MACD histogram has not turned green yet, because this gain is only it only recovers half of the previous week's fall. But on the daily chart, we can see that there's this 200 days moving average is clearly holding. So it is probably going up from here. And I guess, some of you, if you are keen to get some Apple shares as of, and this is actually quite a good pullback. If let's say you are also bullish and optimistic of the overall stock market trend moving forward. So if you want to get some Apple shares, I think this could be a potential point to buy some. But of course, this is not a buy and sell recommendation, but it's just myself sharing in my Tony's Investing Diary how I will be probably deploying my monies and investments if I'm keen to actually buy some Apple. Okay, after Apple, let's take a look at Amazon. Okay, for Amazon, it has rose right 6% previous candle on the previous week. So Amazon is currently back up. Of course, whether it will be rising at this strong 60 degree or slightly 45 degree, or what is it, we shall see. Although of course for Amazon's case, it's still quite far away from its all-time high of about $170 plus. So I think that will be a potential target. On the daily chart, right now it's facing a bit of a resistance here. I guess there's a bit of indecision candle if you look at the daily candles. Thursday was a indecision doji, and Friday is actually a bit bearish with a somewhat like a falling star candle. So if I'm not so sure, I probably wouldn't go in. Although looking back, Monday is actually quite a bullish confirmations to start entering, and possibly a bit of a $7 gain if you manage to do that. For me, like I mentioned in my previous videos also, I usually more of a long short taker. So for such it's really not my preference. I like to buy more or deploy my funds when the odds are more in my favor. Otherwise, I would actually just grind some income from the options and just wait for a more favorable setup for me to take. Okay, move to Google. Okay, Google has actually recovered the losses of the previous 2 weeks, and I think MACD histogram has also turned green, although there's a bit of blippings from, I mean, occasionally it's red, green, so the indicator probably is not as accurate because of the ups and down. But if you were to zoom, I mean, if you take a look at the overall weekly, I think it's still on a bullish uptrend with that 20-week moving average and the 40-week moving average as quite a reliable support so far, at least going back to July and possibly even February period. So for Alphabet's Google, I mean, if you like to get some, personally would prefer to get some maybe more closer to the moving averages at the 20-week. Otherwise, now it's a little bit more like waving up, so probably will be waiting a while. On the daily chart, we have seen some not so good candles. All right, on Thursday it actually closed a sort of a falling star candle where the price have actually fall lower than it started. It did manage to rose a little bit in the day, but then it closed down and lower than where it started. On Friday there was a little bit of recovery, but well, the volatility is much more lesser. So I would say this bearish candle is not yet invalidated. It could easily just come down again. Yeah. So probably waiting for next run. Maybe when it's dropping off to more of the 50 days moving average or 100-day moving average before, or even the 151, like closer to something like 135 or 131. Okay, let's take a look at after Google will be Meta. Meta of Facebook. Okay, Meta is the strongest performer probably so far that we have seen. It has rose 6%, and it's let's see if there's any past resistance for Meta. There is, in fact, it's already it's very close to its previous all-time high around about 384.5. So will Meta actually break the all-time high that was last clocked in August 2021? I think it's going to test that. It's going to try it. Whether will it break or not break, that's not something that I will be able to forecast. On the daily chart right now, it's already waving up. So again, if you are interested in Meta, perhaps it might be good when it's waving down towards some of the support zones like the 20 days exponential moving average, or perhaps even the 40 days exponential moving average. So anyway, these are just me sharing my thinking thoughts, what I might do if I am keen to actually grab a bit of Meta shares, or just to do some short-term tradings within the next few days or weeks. So not a buy and sell recommendations. Please consult your financial advisors before you make any financial decisions. Okay, moving to Microsoft. The other day I saw the news that in terms of capitalization, Microsoft has overtaken Apple as I think it's the most expensive company again. So it has been a while since Apple has been holding the lead. Okay, anyway, let's take a look at the weekly. Okay, for the weekly, Microsoft is rising higher high, a new all-time high. On the daily, I think despite that somehow uncertain Thursday fall, Friday it has actually resumed, and the MACD histogram is still green, so it could possibly even pierce up to $400 in the coming weeks. Although it's like my style, if I want to really get into Microsoft, I will still wait for a pullback closer to the 50 moving average before I grab it in. Okay, now let's take a look at NVDA. Wow, okay, Nvdia 11% gains in the past week alone. And if you look at the daily chart, it has jumped, I think, on Monday over 7%, and then after that the rise starts to moderate, and on Thursday, Friday, it didn't really manage to close in the green candle. So right now I think it's a bit indecision doji on the right side. So probably wait for signs to be clearer, or maybe a bit of wave down. And the last of the Magnificent Seven, Tesla. So Tesla is actually the weakest in the past week. At least it has actually fallen 7% to very close to the, let's zoom in a bit. Okay, fallen 7% towards the lower trend line that I last drawn in my previous video. So for those who are Tesla bulls, this could be a point that you can start to look at. I mean, if you are eager to get some Tesla shares, the coming week could be the time to buy. If you like a bit of confirmations, then possibly I may wait for, say, on the right side when Tesla might even fall a little bit lower, especially below the trend line a bit, just like previously back in October, just to do a bit of a false breakout, so as to, you know, shake out some of the weak holders there, and possibly the first sign of a green candle, or when the MACD histogram has turned green, then you can start to load up some to ride the next wave up. But as I shared, this is a symmetrical triangle pattern, so any breakdown could fall lower, any breakup could also means that it might rise higher. So it's kind of really like a consolidation zone. Personally, I would still want to prefer to wait for a similar pattern, a green candle, just like back in October, as a guide. And possibly once it starts to move closer towards the upper trend line of, let's say, 240, or rather 247, well, I may take some profit off the table and leave some just to see whether it has the enough bull strength to actually break out of this symmetrical triangle that has been forming for over half a year since. Okay, so other than the Magnificent Seven, a bit of bonus. There are some counters that are in my watch list. In fact, one of them I actually sold a put option. I kind of like rolled down and then rolled up in the past few weeks. So this counter that I'm mentioning is Nike, NKE. Why Nike? Well, let's wait for the chart. Okay, why Nike is because if you recall, I think previously when the earning came up, it wasn't as great. Actually, the earning was good, but the outlook was rather underwhelming, and Nike actually falls back down from its 200-week moving average into sort of a new down wave, and initially sold put options at around here. I sold it at about 100 or 105 as the strike. Then when it starts to fall more, then that's where I need to defend my strike, because I don't think I really want to buy shares. I mean, a bit of second thoughts at this price. I would probably like it to be somewhere closer to 90. So anyway, I actually rolled down the to something like June in terms of expiry for the put options, and in terms of strike price, I actually rolled all the way down to something like 87.5. Then in the past week, when it started to rise up, I don't want my money to tie up so long into June, so I kind of like roll back up again to April, but this time I actually roll it to 92.5 if I remember correctly, in terms of the put strike. So well, we shall see here, and whether this this week's bullish candle, where it actually turns, it actually closed green, whether this will be a reversal. On MACD histogram is still red, so actually it has not confirmed, but on the daily chart there's some movement that I kind of like it, although it's still not certain yet. So as you can see, previously when it actually turns green, I thought, hey, maybe the buyers are coming back, but right after I went in, it kind of like turned red and then fall and fall. So right now it is displaying something similar. It has went out on Wednesday and Thursday, but on Friday it has again closed down. So whether it will be a wave down from this 150-day moving average, we will need to see in the days coming. If it does goes down further, then there could be another down wave of possibly breaking, say, 100, or maybe going to something like 98, 97 to test this potential support here. If it doesn't goes down, or it consolidates over the next few days or weeks, then there's still a chance that, you know, this could be a bottom, and it could be starts to starting its recovery, moving ahead. So that's for Nike for me. Okay, and some of the counters that I'm watching, I may or may not take a position in it. So the first one, some of you might not like it because it's China. It's actually the ETF ASHR, which tracks the CSI 300 index. And I think you can see why I'm watching it, because on the weekly chart it has actually clocked another new all-time low. And to be honest, this counter is actually not for the faint-hearted, because if you look at it, since the China trade war intensifying, I mean there's ups, there's down. I mean since Trump's days, and then finally now Biden's, and then now re-election coming in US. But anyway, you know, it really goes roller coaster up and down. And I think US China, the trade war, the regulations, all the duties that they place on each other, all the banning of technologies, and all the restrictions here and there, take for that kind of retaliation. I think those are really bad for the business on both sides, and just simply I mean, it's just simply part of the contribution to the whole inflation. Of course, supply chain has changed and managed to adjust to that. So right now, I think China, and partly also it's not really all entirely US, because China has been focusing on its people and has been tightening a lot of regulations. So much so that there's even some investors that openly declare, as well as at least one YouTuber that I know, my mentor actually, Adam Khoo, that has openly declared that he's going to move out and exit his China positions eventually. So anyway, but I do see a short-term potential recovery trade. Probably just a swing up, and then after hitting the moving averages it might come out again. But I'm still watching this because there's no clear signal yet, except for a slight bullish divergence here on the RSI, where it's currently clocking a higher low versus the previous one. Okay, but MACD histogram is still red. On the daily chart, well, it has sort of trying to form a bottom, not really a strong one, but MACD histogram has already showed that. And traditionally, this is actually, in terms of indicator for RSI, for MACD histogram, this is actually quite a bullish indicator setup, because we see let me draw this. We see a triple bullish divergence where the ASHR has moved a bit lower with a lower low, but the indicators are all showing higher low. So yeah, so if you are interested to getting something like China, a bit of China exposure, and you think that hey, it has fallen enough, after all China is indeed one of the, I think the number 2 or number 3 largest population in the whole world. So with its populations and all that huge market there, anyway, okay, let's not mix economic with share. But in terms of indicators wise, I don't mind, you know, taking a little bit of position just to ride the up wave, possibly bread to something like $24. Okay, so that's for ASHR that I'm looking at. Other counters that I'm looking at, another one is actually Boeing. And Boeing has Boeing is in trouble again, because another airplane has gone into trouble, and there's, I think, some casualties. And then now the FAA, they are looking into the model, into the technical aspect, design, and all of the models for that particular plane has been I think grounded. So anyway, the past 2 weeks we can see after the fall it gapped down, and now there's no sign that it has reached a bottom yet. So I'm only watching this. Who knows where it can fall? I mean, all these moving averages, I'm not so sure whether they will hold. We still need to watch. Possibly the first support that we may look at will be something like a 180. That is likely a support that I expect to see a bit of potentially consolidations, and whether there will be a bounce up from there. If it doesn't bounce up, it doesn't change back to an up wave, then it might even go lower. But I think the chance of going back all the way to 121, I don't think it will fall back to that low, because this is not the first time Boeing having such issues. So I think the investors, the traders, they'll probably be smarter this time to know that, hey, whatever, I mean, Boeing is not going away. It's one of the 2 top airplanes producer in the whole world. So even if its commercial airplanes are in some troubles, I mean, it's also involved in a lot of other military production of planes and parts in weaponaries and all those. So I think Boeing is an interesting counter to be in my watch list. So on the daily chart, also no sign, although it has reached the oversold region, but I will be more inclined to only buy or to take a bullish position when I see a sort of bullish reversal candle pattern. Okay, before I close off, let's look at just a quick one in terms of the heat map. So as we can see, the Magnificent 7 asset Tesla has actually gained the most in the past week, and although some other counters like the banks, even though their results were quite good, but they actually closed down a little bit. So this could be a situation of buy in anticipations and then sell on news. If we look at the Fear and Greed Index, okay, so fortunately it has actually gone down from the extreme greed level that's clocked in December 2023, and now is in the greed territory. But still, usually people will not be buying when the Fear and Greed Index is in this 2 zone, because that's probably when the greed is there and when the price has risen for quite a bit, I mean, if you look at the market momentum, it's usually more of the downside move rather than the further upside. Okay, for calendar moving forward, in the week ahead, okay, Monday is a holiday, I remember. Yeah, it's a US holiday, so the markets are closed. Tuesday's CPI will be out, and there's also Wednesday will be industrial production, CPI year to year, and then the core retail sales. Thursday, I think the one that will be probably look out for will be the unemployment rate and the employment change. Okay, and also the unemployment claims in US. There's a couple of FOMC members speaking, so some might be a bit more hawkish, some might be a bit more dovish. We have to see, and their comments might steer the market in terms of the anticipation for when the rate cut might comes. So far I think the narrative, like I mentioned in the last video, seems to be a bit more hawkish, but well, we have to see. But other than that, I think in the coming week ahead is not really so much of a, I mean, except for all the noise from the FOMC members. So that's all from today. I hope you enjoyed the video, and do share in the comments perhaps any of the particular investing or finance topics that you'd like to hear from me, and whether you will still want me to continue these weekly reviews of the market, of the stock markets and counters that I'm looking at. If you do like it, then please like and subscribe, and also comment it to let me know, so that I will consider perhaps not to break up. Otherwise, I will probably be breaking out from here onwards and rethink what sort of videos I would like to produce. Thank you for watching. Have a nice week ahead. Goodbye.